Offshore Marine Services financial model with a 10-year DCF discounted cash flow and valuation provides a detailed financial analysis for businesses providing offshore support services. It includes comprehensive projections for fleet utilization, rates, leases, operational expenses, and capital investment. This model helps assess long-term profitability, investment feasibility, and business scalability. Additionally, it produces pro forma financial statements, net present value, NPV, internal rate of return, IRR, and payback period to support decision-making and strategic planning. Key components: 1. Fleet utilization, assumptions for leasing, finance, operating, owned, and days hired. Second, revenue streams, income from vessel hires, project-based, consulting, and other revenue streams. 3. Operating expenses, costs related to fuel, crew wages, maintenance, insurance, and port fees. 4. Capital expenditures, CapEx, investments in new vessels, equipment, and facility upgrades. 5. 10-year DCF and valuation, long-term financial projections, including NPV and IRR calculations. 6. Pro forma financial statements, includes income statement, balance sheet, and cash flow projections. 7. Payback period, calculation of the time required to recover the initial investment. Key benefits: 1. Investment viability, evaluates profitability, scalability, and return potential for offshore marine operations. 2. Strategic planning, helps optimize fleet expansion, service pricing, and cost control strategies. 3. Informed decision-making, supports funding, market positioning, and operational efficiency with financial insights. 4th, investor appeal, a robust financial model to present to stakeholders and secure financing. Model guidelines. So, a quick overview of the model. In the Contents tab, you can see the structure of the model, and by clicking on any of the headlines to be redirected to the relevant worksheet. On the Manual tab, you can feed the general information for the model, such as project name and title, responsible, timeline of the model, and date and currency conventions. Additionally, there is a description of the color coding of the model in the same tab. Inputs are always depicted with a yellow fill and blue letters. Call up, that is direct links from other cells, are filled in light blue with blue letters, while calculations are depicted with white fill and black characters. There is also color coding for the various tabs of the model. Yellow tabs are mostly assumptions tabs. Gray tabs are calculations tabs. Blue tabs are outputs tabs, that is effectively results or graphs. And finally, light blue tabs are admin tabs, for example, the cover page, contents, and checks. Moving on to the inputs. Detailed inputs for revenues, such vessel hires, and other revenue streams, and costs, splits between direct costs, direct labor costs, and other direct costs, and indirect costs, such as admin staff, outsourced staff, insurance, advertising and promotions, as well as other costs, working capital, receivables, payables, and inventory, fixed assets and capital expenditure, split into startup investment and new maintenance capital expenditure, debt and equity financing, as well as valuation assumptions, such as discount rates used in the weighted average cost of capital. In the Summary tab, you can see a high-level report with the main metrics and value drivers of the model. It can be readily printed on one page for your convenience. Calculations. This is where all calculations are performed. The revenues are calculated based on the various revenue streams, and by deducting the operating costs adjusted for inflation, the operating profit is resulting. Based on the assets financed and the gearing of the financing, the interest and depreciation are occurring. By using the working capital assumptions, the impact of the business cycle is presented. Finally, depending on the level of the investment considered, the relevant debt financing is calculated, long-term debt and overdraft. In the Outputs tab, everything is aggregated here into the relevant statements: profit and loss, balance sheet, and cash flow. Moving to the Valuation tab, a valuation is performed by using the free cash flows to the firm, and then a series of investment metrics are presented: net present value, internal rate of return, profitability index, payback period, discounted payback period, sensitivity analysis. In the Graphs tab, various graphs present the business metrics, revenues, operating costs, and profitability. Then, multiple charts present the working capital, debt, and equity, along with cash, assets, and cash flows, which results in a valuation on a project basis as well as on an equity basis, together with the feasibility metrics. In the Break-Even tab, you can find a break-even analysis and see how many sales you need to break even.